Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring. The US dollar had another positive week, enjoying some good data. UK and US inflation data, housing figures and most importantly the FOMC Meeting Minutes stand out. These are the highlights of this week. Join us as we explore the market movers on Forex calendar. US jobless claims posted a higher than expected reading of 294,000. The 20,000 addition reached the highest level since February 2015. However, the positive trend that began early in May continued for the dollar, especially as retail sales beat expectations, something that doesn't usually happen. The fear of a Brexit, highlighted by the BOE, is one possible reason to wait. This week's crop of economic data manages to strike a pleasing balance between volume and importance. Almost every day there is enough of sufficient importance to warrant investors' attention without overwhelming them in frequency. US data includes Fed minutes and CPI numbers, with the former particularly interesting. If the doves on the FOMC were in the ascendancy at the last meeting, then subsequent US data will only have emboldened them to keep on warning about the dangers of higher rates. US consumer prices barely moved in March, rising 0.1%, showing little reason for interest rate hikes in the near future. The lukewarm inflation figures do not reflect the ongoing improvement in the job market. The CPI declined 0.2% in February. CPI is forecasted to rise 0.4%, while core prices are estimated to climb 0.2% this time. UK data also comes into focus, including CPI numbers and employment figures. Brexit dominated last week, but with the UK economy still lackluster, the focus will be on whether there is any improvement in underlying data. Employment numbers will keep traders' attention in the UK this week. The number of people receiving jobless benefits increased by 6,700 in March, missing predictions for an 11,900 cut. The jobless claims rate remained at 2.1%. BOE said recruitment in April was nearly unchanged, showing muted employment growth. Meanwhile, UK unemployment edged up for the first time in 7 months and employers added fewer jobs than forecast, suggesting the labour market is losing momentum. The number of people looking for work climbed by 21,000 to 1.7 million in the 3 months through February. In light of these figures, the Bank of England is in no hurry to raise interest rates anytime soon, and the June 23rd EU vote is starting to weigh on UK economic growth. The amount of people receiving jobless benefits is expected to rise by 4,100 in April. With no Federal Reserve meeting until late June, Fed speakers' hawkish tones have helped the US dollar rally. This week, all eyes will focus on the Fed minutes. These are the meeting minutes from the April decision, in which the Fed left policy unchanged, acknowledged some improvement, but did provide any hike hints. The chances for a rate hike in June dropped after that meeting, but since then data has improved. So this is an opportunity for the Fed to hint about raising rates in June, if this is indeed the case, and it's quite unclear that this is a real option for the doves that control the Fed. It is important to remember that the minutes are edited until the last moment, allowing the Fed to sharpen any message.